2019 was another successful year for SEGRO, with our clear, well-established strategy delivering excellent financial and operational results. We've reported pre-tax profits up 10.7%, driven by two main factors. These were a 4.7% growth in like-for-like net rental income and a record volume of new development projects. We've also reported an 8.9% growth in net asset value per share as a result of another strong valuation increase. Our excellent financial results were driven by the consistent application of our strategy, in particular by disciplined capital allocation, with almost £700 million of development-led investment and £440 million of disposals, and by further operational excellence, which enabled us to improve occupancy levels and grow income from our existing portfolio. Our high-quality, well-located land and buildings have continued to benefit from the structural tailwinds of urban population growth and the e-commerce revolution. These trends have created strong demand for our assets and led to significant gains for us both from new developments and asset management of the existing portfolio, which have driven rents, earnings and asset values upwards. As we expected, performance from our existing assets was strongest in the urban or last mile part of our portfolio, where urbanisation and e-commerce growth come together. This area, which represents about 2/3 of our business, produced the strongest rental growth and valuation gains. In terms of big boxes, this segment produced the most top-line income growth and gains from development. Looking at our geographic markets, the UK remains strong for us with our heavy London and South East weighting. But as anticipated, we're now also seeing the increasing impact of online retail growth and urbanisation on our continental European markets. This has contributed in part to valuation gains and rental growth in the continent, outperforming the UK in 2019. With regards to development, 2019 was another record year for us. We completed 40 projects, which will produce £44 million of new annual rent, of which 92% has already been secured through lettings. We delivered new buildings for customers such as Amazon, Aldi, Porsche, DHL and FedEx, as well as creating 5 new data centres in Slough. And further pre-leasing success in 2019 meant that we entered 2020 with a strong pipeline with 46 ongoing development projects, which will produce about £50 million of rent. So the development programme is likely to be a key driver of growth for some time to come.
2019 has been a terrific year for SEGRO, and you can see this in the financial results that we're reporting. Adjusted profit is £268 million, up 10.8%. That's almost double the level of 2015, just to give you an idea of how quickly the scale of this business has expanded. Earnings are up 4.3% to 24.4p per share, while the underlying growth rate is just under 10% if you adjust for the impact of a one-off fee that was paid in 2018. Indeed, we're increasing the dividend in line with that trend growth rate of 10% to 20.7p per share. Looking at the property portfolio, values are up 7.5% to £10.3 billion, reflecting our asset management and development activities and the strong underlying market. That's driven an 8.9% growth in net asset value to 708p per share. The balance sheet continues to be in great shape and provides a strong platform for growth. Loan to value is 24% and the cost of debt is just 1.7%. We took advantage of the attractive market conditions to raise just under £500 million of net new financing during the year. And that's helped us have a liquidity position of £1.4 billion to help fund continued investment across our business.
Looking ahead, 2020 is a big year for us because it will mark 100 years since our company was founded. We've started the year in good shape and we have confidence in our prospects to deliver further growth. We'll continue to take a long-term approach to running a responsible and sustainable business, balancing the evolving needs of our customers, communities, employees, shareholders and partners as we seek to position ourselves for ongoing success well into our second century.